Happy Monday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Monday, October 2nd, 2023. We'll start with our executive summary this morning. So, number one, the first batch of September manufacturing PMI data confirmed a continuation of the global manufacturing downturn. With the exception of China, every country that has reported thus far reported a reading below 50 for September, indicating contraction. Number two, Friday's University of Michigan Consumer Sentiment Report for September was supportive of both our resilient U.S. economy theme and the immaculate disinflation narrative. Confidence for low income, middle income, and high income consumers rose to their highest respective levels since June, July, and July 2021. The median 1 year and 5 to 10 year CPI expectations declined to their lowest respective levels since March of 2021 and September 2022. And then lastly, the weather model composite signal for bonds improved to bullish today. If the BOJ does not surprise investors with an additional policy tightening this fall, we are likely within 10 to 15 basis points up for the highs in Treasury bond yields for this market cycle. Transitioning to our global cross-asset rundown performance, we'll start with U.S. equity sectors. S&P 500, that's down 0.7% week over week. A lot of limited dispersion, generally speaking, but we have a lot of dispersion when you look at the decline we've seen in utilities, down 6.9%, versus the advance we've seen in energy versus the 1.2% week over week. Transitioning to factor performance is getting a little bit more diverse here. So S&P down 0.7% week over week. It's being led, equity factors being led to the upside by high beta, up 0.5% week over week, being led to the downside by low beta, which is minus 2.6% week over week. That's obviously not a recession type fear type signal that's being priced in the market. So this is clearly a continuation of what we saw last year in terms of the phase one liquidity cycle downturn. This is not the market. The correction that we've experienced in the last couple of months is not the market getting overly concerned about growth, because we clearly be seeing things like high beta significantly underperform their low beta counterparts for one particular indication of that. In terms of geographic performance, S&P down 0.7%. All geographies are down on a week over week basis, being led to the downside by China, minus 2.2%, Japan, minus 2.1% week over week as well, followed by Brazil at minus 1.6%, and then Eurozone at minus 1.4%. So pretty nowhere to hide from a geographic standpoint on a week over week basis. Shifting gears to the fixed income markets. So fixed income, if you look at the core ag, down 1.1% week over week. TLT continues to just trip and fall all over itself, down 3% on a week over week basis, leading to the upside here in fixed income is 1 to 3 year treasuries up 0.1% week over week. Getting into a currency market here, dollar continues to be on this very impressive bull run, multi-month bull run here. I think it's 11 or 12 weeks in a row of the dollar appreciating in value in terms of the DXY. That's up 0.7% week over week in terms of the UUP ETF. Leading the currency market higher is the Chinese yuan, 1.2% week over week. And then to the downside, we have things like the Swiss franc, minus 0.9%. We also have the Japanese yen off another 0.7% in the absence of, the face of UA effectively doubling down on yield curve control and implementing incremental bond purchases in the last couple of weeks. Shifting gears to commodities. Commodities taking a little breather here, down 1.2% on a headline index basis. Precious metals leading commodities to the downside at 4.4%, down 4.4% week over week. We also have ag down 2.1% week over week. You have a little bit of divergence here. Base metals up 2.8% here. Uranium up 3.9% here. So you're starting to get a little bit more dispersion in the commodity space as well. And then lastly, with respect to crypto, it's been a big move higher in crypto on a week over week basis. Get Bitcoin up 6.7% on a week over week basis. Leading the charge higher in crypto, Solana, Golf Club, if you got long Solana, week over week up 26.3% on a week over week basis. All crypto exposures are showing positive price appreciation again on a week over week basis. So that's our rundown for global macro. We'll leave you with some trading range signals from our buddies over at Longbow to give you a sense of kind of how to think about managing risk on a very tactical basis heading into this week. The only signal that's really actionable here as base metals nearing an overbought condition there. You got neutral short-term and medium-term price momentum now. So this had been a bearish instrument for a while. You're now starting to develop some neutral positive price momentum. So if you can start to get some bullish short-term price momentum and bullish medium-term price momentum, this might actually be something that's worth buying into on a pullback for those of you who've been kind of stalking this asset class in recent weeks, and then we'll wrap it up with some S&P levels here. We're kind of in the middle of the range still. We got 41.87 on the low end of the range, 44.89 on the high end of the range, right smack dab in the middle of the range there. So not really much to do from that perspective. So we'll wrap it up there. Darius Dale presenting our macro minute for Monday, October 2nd, 2023. Best of luck out there today. Everyone have a great, wonderful day. We'll catch you back here tomorrow. Cheers.